Today is Monday, March the 9th, and we can go to FinViz and we can see just what an ugly day it was. Decliners led advancers by almost 10 to 1. Everything was red except Walmart. Certainly nothing in the healthcare sector that looked interesting. Volume exceptionally high, but the market breadth, which is what we like to look at, is coming down to its previous low. Remember, we've been looking at what it was like in 2007, 8, and 9, and we're looking for the same kind of volatility, but this is an extremely steep drop. I haven't got my mouse on my iPad here because I'm not at home, I'm on vacation. But you can see the very steep drop that we've had. It's pretty unprecedented. If you look at Sentiment Trader says that there's reason now to expect a bounce. My feeling is it's going to be a dead cat bounce, and we're just going to see volatility, and we're going to stay in a bearish position for quite some time. Now, if we see a bounce tomorrow, it's going to mean that we've experienced a higher low, and we're going to look for a series of higher lows that is going to indicate to us that the bulls are taking charge, but we're weeks away from that. Let's look at some of the charts now. Let's look at Apple. Where's Apple? This is annoying. Let's look at Whirlpool. Whirlpool, this is a weekly chart, is not as low as it has been back in late 2018, but it's getting there. This is a stock that we thought had gotten away from us and was registering over $206 at one point in 2015, but it came back up to recently 160, and now it's trading down at 112. So that's a great opportunity stock. If you want to start nibbling in that, the time is not right yet, but it could be coming. Let's look at AT&T. I bought some more AT&T. I actually filled my position in AT&T with 1,100 shares. The reason being that it's now at 6% dividend, and that's where I wanted to buy the stock, and that's what I did. Does that mean it can go lower? Yes, it certainly can, but in the meantime, it's going to pay me a 6% dividend. Home Depot, which is another stock that we thought had gotten away from us at $247, is now trading at $210, so there's going to be an opportunity there in the future, but not quite yet. Apple, the good news on Apple is if you look at this weekly chart, it's not doing as bad as it was 2 weeks ago. The volume last week was less than the volume the week before. So let's keep an eye on Apple. This is an opportunity. If you bought the stock today at 266, and I actually bought 100 shares today, but I sold on my Apple, AT&T, WDC, and Caterpillar, I sold September 18th calls in everything, which will bring in roughly $12,000 in premium, and I sold them at a level equivalent to the price that I paid for the stock. So that means that throughout the summer, if I can't get back to where I was for the price that I've paid for my stock, I'll keep $12,000 in premium. If I can get back to where I was when I bought this stock earlier in the year, then I will be whole again, but I will also have $12,000 in premium that I get to keep. So that is my risk offset for if the market can go lower, and the market will go lower. I just wanted to sell some premium now rather than later, but I did it at a price that I would be very happy to sell my stock at, so I don't regret that at all. So I'm still holding, I'm still adding. I'm adding AT&T. Haven't added Caterpillar today because I think there's going to be an opportunity, maybe even below 100 for Caterpillar. And I added 100 shares of Apple. I did not add any Whirlpool today. There will be opportunity in the future.